morning. We're looking at the weekly Eurodollar chart, and we have been watching this large head and shoulder pattern forming. But, and it's a big but, if you look at where the neckline was drawn, okay, that was the low. And the low, you can see from here, on that line there, the level there, the low was 112.16. Now we had that 61.1186, didn't touch it, hit that neckline. Now when markets hit necklines and bounce, then you think that there is a bit of a problem. The other problem with the euro is it's just gone sideways. I mean, but that's what the euro does. It does go sideways before it makes it move. We saw that last year when it did this, and then it moved, and we're seeing it again. Now let me take you over to the monthly, because that's quite interesting. Now if you look at the monthly euro chart, you can see that we reached the 38.2 of that whole move lower from 2008. So, you know, markets do retrace. It's retraced back to this area here. You can, without question, have a head and shoulder continuation pattern. Now this is what we could well be seeing, a continuation pattern of the downtrend. But it's not acting like it should. It's below some really key levels, obviously. It's below the 23.6, which is coming in at 1698, and you've got that 21 weekly average coming in at 1740. So we go back to the weekly chart. So although the monthly is showing us that it's, you know, quite important what we did when we went up to these higher levels, this is what we've got to watch. Now if you look at where my line is drawn, it's coming in at the 61.8 this week. Now, when markets go sideways like this, it's waiting for something. And what I think this is waiting for was these to get off the floor before it made its move. It's very difficult for a market to be that oversold and go lower. So what we tend to see is sideways actions. Okay, not great for if you're trying to trade the move, but you know, quite good if you want to look at the overall picture. If you look at that 200 week moving average, we've cuddled it again. We've gone down, tested it, closed above it. Now this has gone on for weeks. This has gone on since October. We have made breaks below it, but we have not closed the week below it. And I think if we do that, and that moving average is coming in at 1375, if we can do that, I think the market has a really good chance of moving higher. And if we can just hold on to that, we should be able to break above the 1450 area, which would give us a bit of a jump, bit of a emphasis to go higher up towards here. But let's take a look at the daily chart now. Now the daily chart is really looking a mess, isn't it? It really is. So you're getting more from the weekly and the monthly than what you are from the daily. I mean, if I was to stick my neck out, you're just in this range from here to here, keeping hold of that uptrend here. It's the moving averages are just a mess. This is just a mess, all right? But if you look at the indicators, we are still pointing lower, but the price action isn't reflecting it. Friday we closed where we opened, so that's no great shakes. This morning we're up, currently trading at 14.17, all right? So I think as long as we can stay above, you've got 114 as the weekly pivot, and you've got 1386 as the daily pivot. If we can stay trading above there, then there is scope for us to trade a little higher. But remember, you're in a big downtrend move, and this is just what could be construed as these calm before the storm. Okay, great. I will catch you later on today.